What day is it, everybody? What day is it? It's Hump Day. Welcome to the Wednesday edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday, as we are going to do what we do each and every day, identifying 10 to 12 futures markets from an educational perspective, looking for breakouts and reversal trades. If you're new to the channel, one of the things that we do differently here is we try to leave the lines on the charts so that you can see the results after the trades, whether they were good, bad, or ugly. And we will see what some of those look like yesterday, although we had a really nice trades if you were able to manage them throughout the day. So let's go ahead and take a look. Also, question of the day. Do you trade breakouts? Do you trade breakout trades? Is it something that you look for throughout the day? And have you learned how to identify breakout trades? So please leave a comment down below. We are really talking breakouts in the comment section. All right, let's go ahead and talk with the S&P. So the ES yesterday, we're up about 16 points in pre-market, but we had a really big sell-off yesterday. And yesterday we were talking about, how difficult it is to trade with sideways price action and trading in a sideways price action market. And we had a 15-minute level that price entered yesterday. Now, this is really where it's important. We talk a lot about what's called the 6-candle rule. And for us, the 6-candle rule simply says that if I get into a trade and price hasn't made its move in 6 candles, it's time to get out. It's time to look for something else because that trade's probably not going to go my way. And that's exactly what happened yesterday off this 15-minute level. This was a pretty decent level at the 2 a.m. reversal, 2 a.m. my time, which is right around the London Open. Price came back down into the trade and gave us a reason to say, okay, we had a pretty good arrival. We should be able to at least make it up to here for a 2-to-1 reward to risk. 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So since price had gone nowhere, we actually put out a trade alert that said, okay, time to get out, move your stop to break even, because this trade is just not going to work out. And now what that does, however, for those of you that are familiar, what that sets up for is it changes the trade. Oftentimes when you see a 6-candle rule, it becomes a breakout trade to the downside. And that's where really price moved down from that area. That really fed you in a really nice entry. Now, it did come into our next hourly demand level, and it sliced right through that like a knife through butter. Sliced right through that level like a knife through butter. Now, how do I know that's an hourly level? That's an hourly level because it's a green line, and we put those in there. Now, this was that unbalanced wick over wick area, and I've been kind of waiting on that level. But once we got below this area in here on my 4-hour chart, we got lower swing low right through here, and so this was price failing inside of that zone. And so once we failed inside of that zone, it was time to say, okay, it's really a good opportunity to possibly look for shorts. Now, we will come back in a little bit and look at where this bounced off the Nasdaq level. But we then in the overnight came to this pivot down here and bounced off of this pivot and have gotten a pretty strong rally off of that zone. Now, the question becomes, do we make it all the way back up to these levels, or do we see price reverse? If we see price rally up a bit higher, I would pay attention to this area right about here. This area right about here to me is fairly important. And I'm looking at it primarily because of resistance, support. And so I would wonder if, now I don't have a clear 15-minute demand or supply area, nor do I have a clean supply area, nor do I have a great reason up there aside from all those historical highs and lows. And so I would need more of a candle-to-candle entry inside of that region. So keep an eye on that region for a candle-to-candle short opportunity if we continue to head up for the day. That would be the area that I would look for. Now, there are a couple of supply areas up in this region, but I'm not going to look at those supply areas yet, and here's why. Currently, have we changed our upward trend direction? The answer to that is no, because we've not yet put in a lower swing high, and so I would need that lower swing high in order to get me that upward trend direction, that trend direction to be completely broken. We're mostly just in a sideways price action still, which is a slightly harder time to trade. So yes, I do have some supply areas up in here that we'll look at when price gets a bit closer to that level. So keep an eye on those levels for today, also on the updates. But I still think you're better off looking for maybe a candle-to-candle entry somewhere around 28.90. Keep that area in line today. Now, on the NQ, we had a 15-minute demand level, and price came in here, and we actually got a little bit below there. May or may not have been a stop out for you in that position, but price came into that area yesterday and got a little move out of that zone, and then 6 candles later it had gone basically nowhere, and then in the Globex session we got below there and rallied up pretty hard off of that level. So very similar trade setup in the NQ to what happened in the ES where the move down. However, that one gave us an opportunity to say, okay, we may see a little stall. Now, this stalled at that whole round number of 9,000. Whole round number of 9,000. Actually had somebody send me a text yesterday, asking, hey, where does this thing look like a decent return? And we got a decent rally off of that 9,000 point, as it was a good whole round number area. As we are coming back up, looking at this from just a pure Fibonacci retracement expectation, we're almost, not quite yet, to the 50% retracement of the big move down. So let's keep an eye on around that 50% retracement. Do we see a candle-to-candle opportunity come in? That's also, similar to these areas that were here. So keep an eye on this level. I'm not saying that we've got a quality supply level to go short, and the markets aren't telling us to do that as of yet. It might make sense to do a better, a better short might make sense inside of the rut, which the Russell is been our weakest market. So if you want to go on a short opportunity, the Russell has rallied up less than the other two. The rut would be the one to make sense of going short, and you could even get a little breakdown below this area in here, provided that setup does indeed occur. So we've not changed trend direction as of yet, but just keep an eye on some of those levels. All right, next, let's look at crude oil. Crude oil, we are still between our areas of supply and demand. Don't know if anybody was able to get into some of those some of those iron condors that we spoke about yesterday, as they are still very viable trade setups because the market is still in between these major areas. So I know a number of you have done that. Keep an eye on these areas of demand and supply. If we break through those areas, then we could see price move. But until then, I've got no real directional trade inside of there. Same thing with gold. Yesterday we talked about this gold in this 4-hour kind of sideways price action, and that's kind of what we see here, is that we are in between these areas of support and resistance, as it's just pinching, which tells me that we're setting up for a big move, right? Tells me that we're setting up for a pretty big move going forward, but I just have no reversal trades as of yet to look for. Moving on to bonds as well as currency markets. In our ZN, price did rally up to our supply. 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere. And this happened in our Globex session, so you may or may not have gotten into that position. But now we're just chopping along through that zone. Once again, 6 candle rule helps to keep us out of trouble in that one as well. Although still hasn't failed, it's definitely shown some weakness. So looking at the Globex low, if we break below the Globex low, you do then have a potential area of demand just below that. And so this could set up for a potential Globex trap. So I don't know that I would want to take this breakdown in fear of a Globex trap of getting short below the Globex lows, only to have an area of demand here to reverse it. So if you decide to do that, just be very, very quick to move your stop because of this area of demand right in here. So I don't think that it's probably the safest setup. I think you're probably better waiting for a... Now, I will say your better demand doesn't come into play until down in this region here. These little wick over wick areas are better areas of demand if you do want to get long. and ultimately, I think make better targets if that short does hold on that breakdown. All right, next, the Aussie. So in the Aussie, we had, this is the area that we spoke about yesterday, is kind of a resistance point. I'm going to remove that line just so it doesn't confuse anybody. We still have a demand area in here, switched to a confirmation, and so we didn't come anywhere near our levels yesterday, as our 4-hour still continues its sideways price action. So we're not changing what we talked about yesterday. Don't force a trade. Inside of the euro yesterday, we did get price rallied up through our potential breakout level. However, we didn't get a basing element in front of that, and so really no real reason for entry on the breakout. We got to follow the rules on quality breakouts. If we don't get real reason for entry, we can't take the setup. So I would take a look at this area down here as a potential going forward into today. And then the Canadian dollar, we actually did get a little move out of the Canadian dollar. Price came into that zone, rallied up out of it, about a 1-to-1, but we had this basing here in front, and it just was unable to hold throughout that period. So price came down below there. Let's see if this acts. I'm going to switch this color. I'm going to make this yellow because I think that we could see this act as a reversal area today. Call it a flip area. So keep an eye on that, on price flipping around and heading back down in that zone today. Great British Pound. We're still looking for the breakdown below this region inside of here. We got a little touch below yesterday in the Globex session. 6 candles later, we had gone nowhere and still haven't gone anywhere. And then, so still waiting on price. I think this is still a good breakout point. If price comes down a second time, makes it actually a little bit of a better of a breakout. But right here was our 1, 2, 3, 4, 5. At 6 candles, we were essentially right where we had gotten in. So another example of why we use the 6 candle rule. And somebody literally just sent me a tweet about it this morning asking, what is the 6 candle rule? And it's ironic that it showed up today 4 times. And then in our Japanese yen trade, so price came into our Japanese yen level, and we just barely missed that entry. I mean, like, I got to zoom in to see that it was missed by like a tick. But anytime we miss an entry like that, or we come that close to it, I'm either going to switch it to a confirmation trade or remove it. And in this case, I'm going to remove it because of this basing right in here. Now, my 4-hour trend in the yen, we've got lower swing lows, lower swing highs. This is really my better level now to look for the yen, for price to come back to for a reversal. So when I look at that on the 1 hour, it becomes this area of supply up above. All right. So if you guys have any questions, tonight is our Traders Army Q&A. We'd love to see you join us. Become a Traders Army member and join us for our Q&A sessions. Every other Wednesday, we do open mic, open forum Q&A sessions where you can ask anything you want. So tonight at 7 o'clock Central is when we have one. If you've never been part of it, go to tradersarmy.com today. Sign up for a premium membership. It's great to have you part of the team. And until tomorrow, everybody, have a great day. I'll see you.